Assalamu alaikum wa rahmatullahi wa barakatuh, and welcome to another episode of the Muslim Fin podcast. Before we get started, we would just like to ask everyone to please like, subscribe, please leave a comment if you enjoy our podcasts. Please make sure to give us that thumbs up, and it will really help our channel. So we appreciate that. And then straight off to our podcast. And without any introduction, we have our good friend, Mr. Siraj Buzik, who will be discussing Islamic finance again this evening, specifically dealing with Islamic home loans. So, Siraj, the last time we left off, we talked a bit about the differences between conventional home loans and Islamic home loans, and we went into some of the differences. We talked about things like the treasuries within the Islamic windows and Islamic banks, and we talked about how that differs on the conventional side. What we didn't discuss, and something I think we wanted to touch on, and what we will be touching on this evening, is the switching of conventional home loans to Islamic home loans. So if you can maybe kick it off and give us a bit of insight into that.
Okay. Assalamu alaikum, Ali. Shukran, man. Appreciate it. Yes, like you mentioned, since the last time we chatted, we touched on Islamic home loans or Islamic financial property finance. And the one thing that we saw was that there was a lot of people that understood or heard about Islamic banking and heard about the option, but they weren't really sure how it worked. So we kind of touched on that, tried to give some understanding on the Islamic home loan. But one of the questions that has come through, Ali, was we do have a lot of people that may have existing bonds, so existing conventional bonds. And for various reasons, at the time, they didn't know there was an option from an Islamic banking perspective. Some of them had the bonds before the Islamic banking option was available. So the question that we're seeing is, so I do have a home loan, a conventional home loan. I've now recently found out about the Sharia compliant option. Um, am I stuck in this bond, in this conventional bond? Is there any way I can get out of it? What are my options when I have an existing conventional bond? So the first thing to note is that, an institution that offers both the conventional and Islamic offering, you will have the option of switching your conventional bond to the Islamic bond. And it's quite a easier process because of this being the same institution. So when we spoke about Islamic windows before, we have an institution, a bank that offers a Sharia compliant product, and those are called Islamic windows. So if a client has an existing bond, he does have the option of switching it over from the conventional to the Islamic. The nice thing there is they would switch over exactly where you are in that point of your bond. So say, for example, you had your bond for 7 years, you possibly have 13 years to go. If it's a 20-year term, you can actually switch that bond over to Islamic, maintaining your term. So you can switch it over, maintain the 13-year term. They'll obviously do some recalculations, and they can switch your bond over to a Sharia compliant bond. So that option is available for clients, and it's been quite a strong question, or a good question that's come through from our audience. And the second question was that, I do bank with a bank or institution that doesn't offer a Sharia compliant option. So we do know that, Islamic banking isn't offered by every single bank in South Africa. So you might have a conventional bond with a bank that has no Sharia compliant options available at all. What are my options there? Am I stuck in the bond? So, and this goes to whether you have a Islamic bond or a conventional bond. You can switch your bond from one bank to another bank as well. Let's say you had your conventional bond with Bank A that doesn't offer any Sharia compliant products. You can switch that bond over to an institute or a bank that offers the Sharia compliant option. And what happens in that case is that the bank just buys out, that bond from your initial bank. And then they will then own the debt or own the bond. And then you will then have your arrangement with the Islamic bank or the Islamic window that now owns the bond. So then obviously the structure will be put in place. And again, like I said, you can maintain your existing term. The one thing you do need to note is that it's a new application that takes place. So in essence, when you do this, is that there is a possibility that your rate will change. But again, that's up to the client's personal circumstances, how long he's been banking, what type of debtor he is, or debtor he is, how does he pay his debt, does he have any other debt outside the bank or inside the bank, and just his credit profile as an example. But that option is available whether you're banking with a bank that offers Sharia compliant option, as well as a bank that doesn't offer the option, but you can switch it to an institute that does offer that Sharia compliant option available.
No, great. And it's very interesting that you bring up the credit check, because obviously that's something to consider when you decide to switch over from one financial institution to another financial institution, whether it's any kind of loan or home loan or whatever it may be. Your credit is going to be checked, so it's important for you to also have an idea where your credit is, and whether you've missed any late payments or those types of things. But I wanted to check with you, Siraj, what about costs? What are the costs? Because people may say, "Oh, I'm going to switch over this bond to another financial institution, but can I afford it?"
That's a very good question. So what I do know of with the institutions that offer both the Islamic and conventional option, but they do have the ability to switch it over, and there's no additional cost to that, which is great, right? So that's speaking about an institution that offers both the Islamic and the conventional bond. So you have your bond, your conventional bond with the bank, you're switching it over, but you're staying with that same institution that offers the Islamic option. In most cases, they will cover any switching cost. There won't be any cost to you. It's just a switch. However, with the new application, your profit rate may change, because what has taken place is that, like I've mentioned, and take the example of if you had your bond for a few years, when you got to the bond initially, the market would have been different. So they take a lot of things in consideration. So, say after 7 years, 8 years, 9 years, you switch your bond over to Islamic. It's a new application. They check where you are from a credit perspective, like you mentioned, your ITC. You could have taken on more debt in that period. You could have you could have less debt in that period, but you could also be on a better financial standing. You could have gotten a better job. Your income could have increased over time. Your credit record could have improved over that period as well. So there is that room for negotiation. So from a switching cost with an institution that offers both the Islamic and conventional, in most cases, there aren't any cost for that. However, if you're banking with a bank that doesn't have the Islamic option, and now you're switching over to an institution or a bank that offers the Islamic option, there may be switching costs involved. So there will be something like cancellation fees. And what the bank normally does is that if you are switching your bond, they'll give you a 3-month waiting period. If you switch it within that 3 months, you'll have to pay that penalty fees, and it's from the conventional side. So those are costs to remember, as those switching costs. So for clients to understand, those are costs that could come up when they are switching their bond from one institution to another institution.
So the 3-month waiting period is a period in which you can then wait it out, in a sense. So you could wait for 3 months, continue to make that mortgage payment for 3 months, the installment payment, and then after that period, so once you've given the financial institution notice, right? Is that correct? So you give them notice, then there's a 3-month waiting period, and then once that 3-month waiting period has ended, then normally that amount that would have been owed, or that switching cost, would then fall away. Is that correct?
Correct. So that's one cost to consider. The other cost to consider is when you do a new application, there will be new application costs. So those are things just to take into consideration. So switching is great. The Islamic banking option is great, but we do have to make mention of these things when you do switch, that there are cost implications involved. So we always advise clients, look, if you are making that type of decision to switch your bond to Islamic or switching between banks, is to read the terms and conditions, to have the discussion with the banker or with the bank, just to enable that you do understand what those costs are. So those are the one thing to remember.
What's
And
what's
then,
great about what you're saying, Siraj, is that if you decide to switch from a conventional to an Islamic home loan, you
yeah,
basically can almost do it for free. So there may
correct,
be minimal cost,
correct.
but to go from conventional where you're paying interest to having a contract drawn up with a financial institution where your home loan is halal,
Yeah,
is at a very minimal cost. And I think sometimes it's such a daunting thing for people when they think about it. They may not know that the option is available to them, firstly, and then
yeah,
secondly, they think, oh, my credit is going to be checked, and then and then another thing is, can I afford to actually pay the cost to have it switched or transferred? And now we're
correct.
dealing with those types of questions, and we're saying to them, oh, okay, well, firstly, you can do it, right?
Yeah,
Alhamdulillah, you can make your loan halal in a sense, and or definitely make it halal. Secondly, yes, your credit is going to be checked, but that's something that you should also be aware of, and that's a good exercise for people to
correct,
constantly be aware of.
correct.
Where is your credit? How is it doing? Do you have any late payments? And how do you go about fixing it if you have a low score?
No,
Because
100%.
that's
I think the credit check is part of the risk assessment that all banks will do,
mm.
right? And
Whether
like you
it's
mentioned,
conventional or Islamic.
correct, whether it's conventional or Islamic, there's no Sharia compliant risk assessment. So whether you're applying for an Islamic finance or for conventional finance, a risk assessment will be done. Your credit scoring will be checked. Your ITC will be checked. The good thing about that is it also shows you where you are, so you know where you're at. Um, some things may pop up that you weren't aware of. Maybe you've had, credit somewhere and you forgot about it and it went into arrears and you did not know about it. 2 or 3 years down the line, you're trying to purchase a vehicle or you're trying to apply for a home loan, and this comes up. Look, we can't approve your home loan because you had past debt that you never paid. You got an ITC judgment against your name, or this debt was been handed over to attorneys, and that becomes a snag in the whole application process. And it could possibly mean that you don't qualify for a home loan, even though your income versus expenses, you actually from a income perspective, you can afford the property. But because of those type of things that could be highlighted on your ITC or your credit checks, the bank possibly will not, offer you that finance.
Mm. And then exactly, and then the third thing that we said was that the fees would almost be null or
Yeah,
very, very minimal.
correct.
So positively, what I'm hearing you saying is that there's no reason for people to not switch,
Yeah.
from a conventional to Islamic home loan.
No, 100%. I think, look, each bank will have their own credit criteria, how they look at applications. So, like we said, we try to tell clients, look, you know, do your homework, do some research, find out what these banks are offering, what the application or requirements are, right? And look at the fine print, how does it work? What are the costs involved? The thing is that in the past, we did not have this option at all, right?
Mm.
If you needed to purchase a property, you had to do it through conventional, and that meant that you got involved in an interest-based contract where you were paying riba, in a sense. So today we have that option available. It's just that people don't know how it works. And like you said, sometimes we look at it and it could look like a daunting process, but it's not that. It's just that if you understand how it works, how the application process is, it could be simple. It's just completing documentation, and then getting it approved and then switching that bond over. So yeah, it's great from a market perspective, and especially in South Africa. We do know that there are two institutions that offer Sharia compliant bonds. But again, what we tell clients is go back to your existing bank, ask them what Sharia compliant options are available. You might be surprised that your bank actually offers Sharia compliant product. If not, explore the other options available in the market. Because like we said before, we didn't have this option. Alhamdulillah, today we have a few options available to the Muslim community.
Yeah, exactly. And I think also, if we encourage the community to go out and talk to their bankers and say, I'm interested in switching to a Sharia compliant home loan, what you'll find is because there's a need, many of the other
Correct.
financial institutions that may not be offering it currently will say, hey, but our clients are actually coming to us and asking for this. And that is how you create more competition, I guess, and more opportunities for the community, and for these types of solutions to be available at more of the financial institutions throughout South Africa.
Yeah,
And I think,
100% correct. I think if there's more inquiries from the public, I think the bank will obviously look into it and try to make that product available. From a banking perspective, no banks want to lose a client to a competitor. And if they're losing a client to a competitor due to a product they don't have, that's something they will take very seriously, and then look into and obviously creating that products to make it available for the client base. Because to lose a client, to a competitor because on a product they don't have, it doesn't sit well with these institutions. And client retention is a big thing in the market. So there's good competition. And competition is good because it keeps the banks in checks in terms of their pricing, for example, the requirements, the credit assessments, etc. So competition is a good thing. So again, it also speaks to the public demand. So clients need to go back to the bank and say, listen, I'm Muslim. I want to bank by my faith. What options are available for me? So, and then banks will definitely look into that and in creating those options and products.
and finally, just a question around, in many cases, you hear some of the scholars say that when you go and purchase a home, that maybe your primary residence, the home that you live in, you should, apply for financing and get a home loan. Okay. Um, Normally that refers to the conventional side of things to say, if there's a necessity and there isn't any of these types of products available, then you can potentially, and there's varying opinions on this.
Yeah,
But then, you can potentially go and get a home loan, and
correct.
some of the scholars says you have to rent, right? But when it comes to Islamic home loans, can we say that people are also allowed to then get investment properties and apply for things like, commercial buildings, those types of things?
So a couple of things. You raised a couple of points in your question, Ali. I think the initial ruling at the beginning, when we looked at, the Sharia or the ulama that spoke to the Sharia compliance of products in banks, they took a view on minorities, Muslim minorities in countries where there weren't Sharia compliant alternatives available. So where, there wasn't the Islamic home loan available, they said, listen, because it's a necessity, you can purchase your first property conventionally because there isn't an alternative to that. However, you're not allowed to purchase a second property because your second property or an investment property from a conventional perspective, it's no longer a need, right? It's become a luxury. So
Yeah.
they were saying, look, your first property, because of necessity, you need to put a roof over the head of your family. You're allowed to then purchase because there was no alternative available. Now that there is alternative available, those restrictions kind of falls away. So as Muslims living in a country that offers the Sharia compliant alternatives, it's a duty on every Muslim then to explore those options. Because we're saying that you've got conventional and we've got the Sharia compliant alternative. Right? And if you have any questions or any doubts around it, speak to that institution. They have scholars, they have normally the Sharia boards, that approve these products. Have a conversation. You can get access to these people, or to Islamic banking specialists in these institutions, and address some of the concerns or doubts you may have around the Sharia compliance. But the fact of the matter is that we're saying that it's conventional option and there's a Sharia compliant option available. And as Muslims, we have a duty now to say, listen, we need to then look at the Sharia compliant option as Muslims. That is should be the only option available. So that is the one thing. So now that the option is available to Muslims, we're saying that there's now no restrictions. You can buy a property, whether it be your primary residence, then you can buy multiple other properties as well. There won't be any other further restrictions, whether it be commercial property or residential property or investment properties. So the fact of the matter is you can now finance these properties from a Sharia compliant point of view. The issue was that you've taken out a conventional bond and you're paying interest, and that interest fluctuates. There's uncertainty of what you're actually going to be paying, what the final amount will look like. In most cases, bonds over 20 years, you're paying almost double the amount back to banks. And we've had the discussion around the riba and the ills of it and the harms of it and why it is not, why it's haram in Islam. So again, like we say, the option is now available. We ask people to explore, ask the questions, look at that option, and perhaps inshallah it could be a viable option. It should be a viable option, inshallah.
Inshallah,
The,
I mean,
the other question, Ali, interesting enough, we had a question come up over the last podcast was that we do find, clients that have existing bonds, right? And then they say, look, if we do switch it, if we compare the Islamic bond to the conventional bond, in most cases on the conventional bond, we have this ability to access funds in your bond. So say you've taken out a bond over 20 years, you've paid up 5 years, 10 years, whatever the case may be, you can now access those funds that you've paid back to the bank. So that's a nice option available if you have a conventional bond. How is that, is that option available on the Sharia compliant, property finance? So the thing is, we don't have a similar product, that we can compare directly with the access bond or conventional access bond. But on the Sharia compliant bond, what you can do is, if you've had your bond, your Islamic property finance, you've had it for a certain period, whether it be 3, 4, 5, 6, 7 years, you can actually access funds in your bond. And how it works is that, let's say 5, 7 years, you've paid your bond up, you took out a bond of 1.5 and you owe now 1.1. Remember, with property is one of the few assets that actually appreciates over time. So you could have bought your house for 1.5, but after 7 years, your house could be worth 1.7, 1.8. But you've paid off a nice certain amount, and you've paid off a couple of 100,000, and your outstanding balance is 1.1. Because the market value of property has appreciated over time, being at 1.8 now, and you can access the difference between what you owe and what the market value is. So you could actually access that funds, and you could use those funds with it to do renovations, to square up any debt, but you can access those funds in the bond. What happens in that case, it will be a restructure, but again, it will be another application that needs to be done to see whether you can afford it, obviously. So the risk assessment comes into play again. We spoke about the credit checks, ITCs, because again, a lot of things could have changed between when you initially took out your bond and 7 years into your bond. You could have had more kids, alhamdulillah. You could have gotten a raise, or you got a different job, but your financial standing could have changed in that period, and that's the reason why banks will do another risk assessment to see where you're at that particular point. But the point we're trying to make is that option is available to access funds in an Islamic bond, not the same as conventional, but that option is available to actually access funds in your Islamic property finance.
And it's an interesting point because what ends up happening is that you don't use your mortgage loan as a credit card, and so you have to go back in and speak with the Islamic window or Islamic bank and renegotiate terms, and
Correct.
then have them reassess whether it's affordable. So currently, if we use the amounts that you referred to earlier, you said 1.1 million and 1.8 million, it could be that you may only be able to afford 1.3 million. So
Correct.
instead of taking
Correct.
that additional 700,000, maybe according to affordability, you may only qualify for that additional 200,000. And so then take the mortgage loan up to 1.3 million. But it's a very interesting topic. But what I think is very important about our conversation this evening, and one of the most common questions that we get is that, can I, as a client, actually convert my conventional home loan to an Islamic home loan? And the answer is yes, you can. And I think that is the message that we're trying to get across to everyone
100%.
tonight.
100%.
Alhamdulillah. So I think that would be where we ended off tonight, Siraj. But if you guys liked what you heard tonight and what you saw, please, we ask that you please like this video, leave a comment, hit the bell icon, and please share with friends and family. I think what we're trying to do is we're trying to reach out to the community, educate the community, do the best we can to, in a simple and easy way, have the community understand that these types of solutions are available to them. And one of the biggest purchases that most people will ever make in their life is the purchase of a home loan. And with that, Siraj and I, we will greet you with Assalamu alaikum wa rahmatullahi wa barakatuh.
Warahmatullahi wabarakatuh.
Salam.